Good morning. It's Dan Kurz, DK Analytics. It is January 24th, 2019. It's a gray late morning here in Southwest Florida. We got a bucket full of rain, 2 or 3 inches, I think. This is the exception at this time of the at this time of the year. And it's a welcome exception given that this is a long dry spell that we're in the midst of. So sometimes gray days are good days, especially in the Sunshine State. I'd like to reflect on the precious metals confiscation story that has been getting increasing play in the alt media space. And I'd like to drill down a bit and give you my 2 bits worth, whether I think these are generally valid claims or not. Before we get there, some statistics. The trade weighted US dollar index stood at 91.34. The buck has been firm despite the signs of a Federal Reserve Board, a central bank of the US, turning from tightening to stopping all that and then going into full-blown loosening mode. Not too far down the road, the preview of coming attractions, I think, is what we've seen, and they'll double down on that, but I've discussed that elsewhere. So the trade weighted value of the U.S. buck yesterday was 91.34. The 10-year U.S. Treasury, the benchmark interest rate for so much, stood at 2.75% yield. The S&P 500 having recovered the substantial portion of its decline, 19% decline. Late last year stood at 26.38. Oil at $52.48 per barrel. Gold at $1,284 per troy ounce. And silver closed yesterday at $15.38 per troy ounce. Let me preface my remarks on this precious metals confiscation topic by saying that I believe it's fair to state that there is a convergence, not a happy one, but a convergence of financial, economic, and political goings on across the developed world. In other words, a synchronization of sorts in terms of mounting and unprecedented debt, falling productivity, and unheralded misallocations, and a sharply declining rule of law, and with that, an increasingly diminished property right protection situation throughout the OECD world. When I refer to increasingly diminished property right protections, I'm referring to items such as these outrageous CO2 taxes, that is fake science. 0.4% of the atmosphere doesn't determine global warming or cooling. There's always climate change, but it's a great thing for green cronies to jump on simply because it can be measured fairly accurately in terms of fossil fuels burned. By the way, as a point of interest, what a charade this is. Some 1,500 environmentalists, quote unquote, flew to Davos, Switzerland in private jets, right? They're really worried about CO2 levels. What a bunch of clowns. So when I refer to diminished property right protections, I'm referring to stuff such as CO2 taxes, redistributionism from makers to takers, massive third world amnesty, we know the story, $2 trillion in regulatory compliance costs borne by US manufacturers alone. $2 trillion, that's 10% of the US GDP, not a rounding error. We have huge currency debasement ongoing, in essence, since the Federal Reserve came into existence in 1913. The buck using less than honest U.S. inflation statistics is but a 2 or 3% stub in terms of purchasing power compared to what it was worth before the Federal Reserve Board debased it starting in 1913. Excuse me. Let's assume, however, for the sake of argument, that we will have a return to the rule of law and an associated return to stout citizen slash citizen maker taxpayer property right protections in the US and elsewhere in the OECD world as led by the US. Why led by the US? Because the US has frankly led the world away from just those key principles. By the way, and for the record, as anyone that has listened to or read any of my publications over the past 3 years or so, anyone that has done that knows full well that I consider such happy outcomes, the return to the rule of law and property right protections, to be highly unlikely at best, especially with the Democratic takeover of the House, which has resulted in all investigations looking into massive and sustained abuse of power by those controlling the instrumentalities of government, both elected officials and unelected bureaucrats, to be terminated immediately. I'm talking about deplorable behavior, such as unconstitutional warrants issued by judges to spy on U.S. citizens. I'm referring to illegal spying on U.S. citizens, including much of the Trump campaign. And I'm referring to items such as Hillary's, quote, non-conviction, unquote, despite a laundry list of highly indictable, felonious charges that none other than the former head of the FBI, Comey, read for America to listen to, yet warned Americans to refrain from such behavior or else they end up in the slammer. I mean, it's either you have to laugh or you have to cry. But a lot of such lawless stuff continues to go on. And as you know, you cannot have a return to the rule of law if those in powerful positions are above the law. But let's say I'm dead wrong. I hope I am. Let's further assume that we're about to have a rule of law and, by extension, property rights protection renaissance. It's been over a century since we lost it in the US. 1913, as I mentioned, was an epic year away from property right protections, given the birth of the Fed and the federal income tax in that same disastrous year, which the federal income tax has funded the despotic leviathan that we now have in Washington, D.C. Think of 2 million bureaucrats. Note that a lot of alt media pundits, this is the point I want to raise here, continue to subscribe to this increasingly unlikely development, namely a return to the rule of law, constitutionalism. This, quote, denialism, unquote, is despite the Republicans' failed, totally botched promises to repeal Obamacare, to shrink government, and to jail top-level governmental crooks during their 2-year federal government dominance at the elected level. Maybe they collectively have too much dirt under their fingernails as well. It seems that only divine intervention can ride to the rescue now. And I'm not joking, but let's assume miracles happen. Why then, instead of accelerated financial, economic, and political slash socialist slash Marxist destruction in such a wonderful rule of law, stout property protections world, revisited, gold confiscation would be a remote threat, wouldn't it? Let me go through some arguments as to why I believe this would be the case if we revisited stout rule of law, stout property right protections, functioning Bill of Rights, inalienable rights in the US, and by extension, much of the OECD. In other words, peel back or repeal bureaucratic insanity, redistribution insanity, third world amnesty insanity, and yes, return to honest money. In such a wonderful world, revisited, government could not just take or steal your after-tax income or your after-tax capital gains, which obviously can be manifested in various forms of property, including domestic or foreign cash, domestic or foreign bullion, precious metals, in bar, coin, round form, domestic or foreign cars, domestic or foreign electronics, domestic or foreign companies, domestic or foreign real estate, domestic or foreign intellectual property, such as copyrights or patents, domestic or foreign brands, domestic or foreign licenses, domestic or foreign customer lists, etc. In such a wonderful world revisited, why raise this domestic versus foreign made property issue as regards bullion? Again, precious metals in various forms, such as coins, rounds, and bars. Why? Because some commentators rather, slash pundits, have stated that only domestic bullion, in essence, gold eagle coins stamped by a U.S. mint as concerns the United States, would be secure from confiscation. In my view, in such a wonderful world revisited, such assertions are wrong-headed, misleading, and contradictory, as is the broader topic of gold and silver confiscation, or a repeat of Roosevelt's 1933 Executive Order 6102, which mandated that U.S. citizens surrender their, at that time, substantial gold holdings to the government at $20.67 per troy ounce. That executive order's intention to underpin the U.S. government's efforts to back existing gold certificates currency with actual gold and, importantly, to reinstill monetary slash financial confidence. That same government revalued gold to $35 per troy ounce in the following year, 1934. This led to a 40.9% decline in the value of the dollar in gold terms and to a 69.3% surge in the dollar value of the U.S. government's gold holdings. Naked theft of citizen property, in other words. Let me go through some hopeful thinking on this front, some hopefully logical thinking, hopeful from the perspective of stackers, and hopefully logical thinking in terms of how I size this up. But let me look at this on the foreign coin front and on the confiscation front. More concretely, why I don't believe gold confiscation will recur, and why I don't believe foreign precious metal coins will be made illegal, whether we return to the rule of law and property right protections in America, and by extension most of the OECD world, or not. And just to make it clear, when I say the OECD world, I'm talking about places such as Canada, New Zealand, Australia, Japan, South Korea, Europe, and the US. Reasons why I don't think we're going to have a problem here from a US and in a bigger sense in a global or OECD perspective is first, in terms of foreign gold and silver being illegal or contraband, I say hogwash if we return to the rule of law. Reflect in the United States and in the OECD world at large. For example, reflect on the language in the US Constitution, Article 1, the most important article. The legislature is most directly representative of the people, direct vote for House members, for congressmen. The US Constitution, Article 1, the legislative branch, Section 8, the powers of the legislature or the Congress as pertains to gold and silver coins is as follows. Congress has the power, quote, to coin money, regulate the value thereof, and of foreign coin, and to fix the standard weights and measures. America had a bimetallic standard. Nothing about foreign coins being illegal in the Constitution. And of course, foreign coins couldn't circulate as the nation's money. But that misses the point entirely. Namely, that gold is gold and silver is silver. And only this determines the precious metals value in dollar terms per troy ounce. The rest, beyond very rare coins, if purity is there, is just a label. Translation: both gold and silver can be melted and recast into whatever shape or coin limitless times. That's the whole point. They are indestructible, beautiful, sought after, desirable. Thus, or therefore, if gold and silver rise smartly in fiat currency price terms, physical precious metals ownership will reflect this, not the label, not whether it is a Krugerrand, a Maple Leaf, a Kangaroo, a Buffalo Round, a UBS bar, etc. Second, if a US government which returned to the rule of law and found a legal/constitutional way to force its citizens, US citizens, to sell their gold and silver to the government, then the Fifth Amendment ought to go a long way to assuring that a Roosevelt-style theft can't happen twice. And this despite the disastrous property rights shreddings takings clause interpretation of the 2005 Kalo versus New London Supreme Court decision, which would be overturned if we returned to the rule of law and intact property right protections, intact Bill of Rights fidelity. Allow me a tangent here, if you will. If you think Supreme Court of the United States decisions can't be effectively overturned, well, dwell on the following. The Supreme Court of the United States issued the pro-slavery Dred Scott decision. The Supreme Court of the United States issued the pro-segregation Plessy versus Ferguson decision. The Supreme Court of the United States issued the property rights eviscerating internment of Japanese American decision. And by the way, all these decisions were cast or determined by democratic justices. So if you don't think the Kalo versus New London Supreme Court decision and its harm of property rights protections can be revisited, you might want to think again. That's my point. Well, back to the Fifth Amendment. The property right protection aspect of the Fifth Amendment, specifically the quote compensation for takings unquote clause, reads as follows, quote, nor shall any person's private property, doesn't say domestic or foreign, be taken for public use without just compensation. Translation, without reflecting market values. My bigger point, if the US government returns to the rule of law, again, I don't believe this for New York Minute, but for the sake of argument, then the key proviso underpinning constitutionalism would be stout property right protections, itself a key component of liberty, without which there can be no liberty, no inalienable rights, God-given rights, natural rights. For if the government can steal the fruits of your labor in broad daylight, it then steals your time and your ability to feed your family and to control your own destiny. In short, it kneecaps your freedom and your sustenance. Jefferson, with help from Franklin, wrote a Declaration of Independence over such abuses by the crown. If a government can take your property, it can certainly also take away your freedom of speech and your right to arm yourself. This is a slippery slope towards despotism. Unfortunately, often where there's smoke, there's also fire. Speaking of which, at which juncture, besides as soon as possible, would a lawless / unconstitutional government in the OECD world, focusing again on America, be extremely interested in confiscating citizens' properties? And besides, what's going on? Well, let me walk through what I think is the more likely scenario. That is a move towards full-blown socialism in America, which will serve to worsen our already destructive financial, economic, and political status quo, our toxic public policy stew. So, what would be the triggers that would get the government to bald-face confiscate citizens' property? When would a lawless government be interested in confiscating property besides what's already going on all the time? Obviously, during a time of great financial and economic distress, agree? Such as in 1933, the Great Depression, or in a 1933 revisited world, which, in my view, is clearly in our future. And when would the measly private sector holdings of precious metals be of interest? Why, only after a precious metals price explosion, of course, in dollar terms. In short, not today. And given what will likely happen to confidence in our fiat money-based debt overload situation, it will snap. Confidence will snap overnight. It'll go from it's there to it's gone. We saw it in '08. You have counterparty risks and you have liquidity risks, and the thing feeds on itself, all right? We're only hanging on the thread or a hair or two of confidence. So when this snaps, asset resets will happen very quickly. In other words, bonds and stocks and currencies will get drubbed. In such a world, which features very supply limited precious metals, both in absolute terms, what nature bestows in its crust, very little, and relative to investable assets worth some 250 trillion plus, a precious metals price explosion is likely to be very rapid. That's what an explosion is. It would take just a tiny shift in investor exposure to unleash. Upshot here: investors with huge unrealized gold and silver capital gains after such a development would likely have substantial opportunity to, quote, smell the coffee, unquote, and to sell prior to any Roosevelt-style government theft revisited, especially given how long the hidebound federal government takes to issue new diktats. The big but high quality problem that such fortunate investors, stackers, would have is the return through their sales of precious metals to a rapidly debasing fiat currency, which they would then need to shed ASAP by purchasing scarce vital assets, which can't be printed, with their counterfeit currency. We have fiat currency is counterfeit currency. But that's another story that we've also suggested was a great strategic allocation idea. In other words, purchasing real assets that are vital and scarce in the energy and food arenas. What else would a lawless government be interested in confiscating property beyond what's already sadly happening today? Well, not today. With all the gold and silver mining at current precious metals dollar prices worth a pathetic $14 billion in terms of silver and about $140 billion in terms of gold. That is, a government, a lawless government, wouldn't really pay much attention to the tiny precious metals niche for this reason. And this is in an age of $250 billion of global debt, and given the fact, or juxtaposed against the fact, that all the silver ever mined, or the vast majority of it, excuse me, is economically inaccessible. That is, it's been basically commercially, industrially used, and the remnants are tiny bits scattered about in junkyards. And as far as gold is concerned, most of it is in firm overseas hands, strategic hands, given what's going to happen to fiat money around the world. With the US government soon to be running a deficit in the $2 to $3 trillion range, an operating deficit, not a gap deficit, versus a 1.3 trillion or 1.4 trillion operating deficit last year. As the economy weakens, there's not a lot in the precious metals arena for the capricious, rapacious, whimsical US government to steal. Again, in the precious metals patch, especially not domestically. And I'll give you an example. When would a lawless government be interested in confiscating precious metals property? Again, not today or tomorrow, given virtually zero private sector physical precious metals portfolio exposure. Precious metals exposure, by the way, has been tallied more than once at less than 1% of an estimated $250 to $300 trillion in global investable assets. The breakdown, roughly, of those global investable assets reads as follows: various sorts of bonds, about 55%, stocks, about 34%, real estate about 7%, and private equity and venture capital about 2%. Translation: if you're a government looking to confiscate property, you go where the wealth is, not where it's not, of your citizens, and it's not in precious metals holdings. An increasingly broke and dysfunctional U.S. government, I would argue, will inevitably resort to both money printing and to financial repression on steroids with which to finance the unfinanceable. In doing so, government will force new funds destined for investment into treasuries, while it will attempt to turn non-government bond holdings and stock holdings of various constituencies, various investors, managed accounts, non-managed accounts, straight ETFs, IRAs, KOs, what have you. It will seek to turn non-government bond and stock holdings of these various constituencies into U.S. treasuries. That is, forced purchases and forced conversions. War bonds on an even more massive scale revisited, anyone? And this is especially true in a world where takers increasingly outnumber makers at the polls, also thanks to the huge redistributionism and massive third world amnesty that's been going on since the 1967 Hart-Celler Act. Again, when would a lawless government be interested in confiscating precious metals property? Not when there's precious little to get, such as is the case with precious metals given asset management charters forbidding physical ownership of gold, while there is increasing doubt whether the physical gold ETFs truly are precious metals backed. Besides, money managers cannot make any money holding/storing physical metals for their clients. They can't charge a money management fee. Ever wonder why there is less than a 1% exposure to precious metals? In a related fashion, and to underscore the lacking precious metals allocation point, let me share this with you. If you don't know it, you may want to laugh or cry, or perhaps both. It's as comical as it is sad. Americans prefer a Hershey bar over a real bar of silver by a wide margin, as numerous street-level interviews showed time and time again. By extension, do you really think that a lot of Americans own any physical gold or silver, much less appreciate precious metals purchasing power preservation role, and the fact that silver and gold have been money accepted the world over for thousands of years, including in the US until 1964 with the silver certificate that was redeemable to the bearer in silver? Point being, there are no deep precious metals pockets to fleece here for the insatiable U.S. government. Given all that, doesn't the precious metals confiscation story ring hollow to you too? Moreover, doesn't the quote sales job unquote by some precious metal outfits and their salespeople/consultants seeking to shepherd stackers into national coins from other forms of bullion seem a trifle self-serving and disingenuous, especially if those same people believe in the return to a rule of law, which so many still do, My message: don't let poor logic or scaremongering on the gold and even silver confiscation fronts frighten you out of stacking precious metals in safe, discreet, private, and accessible near you locations. And let's be honest, any confiscation issue that stackers may face down the road absolutely pales in comparison to what non governmental bondholders and shareholders will face, for the two constituencies combined constitute the true elephants of assets to confiscate. Precious metal holdings in the US are but hard to find peanuts in comparison. And unless you are an expert on numismatic coins, focus on buying the metal, not the label. You aren't buying the eagle or the maple leaf or the Krugerrand or the Swiss Freneli or the kangaroo. You're buying what's under the label, period. In other words, buy 999 plus pure gold and silver bullion, preferably in marketable 1 troy ounce form from reputable, established, and proven outfits that also have a sound bullion repurchase track record, capacity, and interest. And believe me, when prices rocket, they will be very interested in taking scarce precious metals off your hands. Given our shared, miserable, global, toxic public policy stew, I hope my little talk here is sound food for thought for physical precious metals allocations for virtually any OECD country citizen. The redeveloping world citizens already get it. Thanks for tuning in. It is June 24th, 2019, and I am Dan Kurz of DK Analytics. I want to say bye bye.